Apurva, would you also be disappointed with the margin, or do you think you'll wait by for the management commentary to really give in your final verdict on Infi?
Sure. So I think I'll probably wait for to hear from the management in terms of the
Go ahead, Apurva.
Yeah, so I think the investments appear to be probably front-loaded. That could be one of the reasons, with more on-site heavy investments. So that would probably be one reason. But I think a very strong dollar constant currency growth performance, as well as I'm reading about 2 billion in terms of large deal for 2Q. I think that's a very, very strong number to look at, considering the fact that they were at about 1.1 billion in large deals in the previous quarter, and prior to that was about 809 million on a quarterly basis. So 2 billion for the quarter is very, very strong large deal booking. So I think that looks like a very, very impressive number.
I'm just going to quickly read out what the management commentary so far has been. Of course, we're going to cut into the press conference live as well and get in a question or two also from the top brass. But here's Salil Parekh, and he's saying that he's delighted with their broad-based growth across all business segments and geographies during the quarter. Also, that large deal wins at over $2 billion demonstrate our increased client relevance. So that, I would say, is positive commentary. UV Praveen Rao, the COO, says solid operating parameters with utilization being stable, offshore mix improving to an all-time high. So again, a very strong commentary coming in from Praveen Rao as well. The CFO, though, MD Ranganath, he says that operating cash flow was over $1 billion during the first half of the year, and ROE stood at about 24.7%. So, Apurva, in that sense, I would say that it's very positive commentary so far coming in from the management. They've talked about the deal wins, which stand at over $2 billion. Impressive?
Yes, certainly. Like I said, that's a very, very impressive number, and management had talked about taking the deal TCVs higher, and they got more aggressive in terms of deal sourcing, is what we understand. The other impressive stat is, I think, the digital revenue, which is up at almost 31% of the revenue. This was about 28% or so, and I believe about 13% or so sequential growth. So I think it's very strong, considering even on a YY basis it should be about 32-33%. So I think that again is a very clear indication in terms of their strategy, which seems to be working with their digital expanding at that pace. Having said that, I mean, TCS digital grew much faster, but at least the trajectory looks very healthy for Infosys. So I think very strong deal signings and the growth in digital are things which stand out when I'm looking at the results.
That seems to be the case. The digital sales, they stand at $905 million. That's an uptick of about 13.5% on a sequential basis. They're saying 23 clients with $100 million plus revenues versus 24 is what they've clocked in this particular quarter. They've lost one client who was in the $100 million or more band in the second quarter. And yeah, they've retained their operating margin as well as constant currency revenue growth outlook that we've already highlighted. The digital revenue, that stands at 31% of the total revenue, but what I don't have is what the contribution of the financial services vertical has been. But Apurva, just analyzing, prima facie what the numbers are like, looking at the first comments from the management as well, how much more do you think the stock can rise from here? I mean, would the good not already be baked in? Or do you still think there's chance for a re-rating in the stock and an upward revision in the target prices from these levels?
So we're positive on the stock. So we have a buy on Infosys. I think we have quite a positive view on this. But we would want to hear management's comments in terms of margins and if there is any front loading of costs. With respect to this quarter, we are very impressed in terms of the overall performance, especially the growth performance, the digital side, and the deal bookings that I said earlier. I think a couple of other things also do stand out. If you look at BFSI as well as retail, CPG, these are like large verticals for the company, and they seem to be growing significantly above the company average. So I believe even in this quarter, they've delivered very healthy growth. I believe in excess of 5.5% sequentially in constant currency terms. So I think that's a very clear positive that your core verticals are sort of coming back pretty strongly. The other important factor is I think attrition seems to be down again for this quarter, which had inched up to 20%. So I see that probably down by about more than 200 basis points. So I think that looks like that was a concern area. So that seems to be reducing. So I think I would certainly call this out as a positive set of numbers, barring the margin aspect, which we would want to hear more later.
Across to Apurva. Then Apurva, hi. Thanks a lot for coming on board to talk to us and help us understand, decode the numbers. It's largely an inline set, but what really has been a bit of a surprise is the fact that we were expecting a bit of a revision in their guidance, which has not happened. They've retained their constant currency revenue guidance. They've retained their EBIT margins guidance as well. Is that something that even you at HDFC were expecting, or has it come as a surprise to you as well? And what could be an impact, if any, on the stock price tomorrow?
Sure. So let me just first stand corrected on the attrition number, which is actually just down about 70 basis points, which is still a positive. So I think the very clear positive coming out of the result is the deal bookings, which is probably significant acceleration over the previous quarter trends. The constant currency revenue performance also seems to be pretty much above where we were expecting the company to post. Margins seem to be on the lower side, so while we were expecting about 70 basis points expansion, it seems to be flattish quarterly. Maybe the investments that they were talking about earlier in terms of the on-site investments that they want to make, opening more centers, is probably more front-loaded than towards the latter half of the year. That could possibly be a reason. Yes, we were expecting the margins to be increased. So I would still say that it's probably got to do with the fact that it's a very recent downgrade of margins which had happened in case of Infosys. So probably assuming that currency stabilizes here, I still feel that there's an upside risk to the margin guidance that the company has. Having said that, we would still need to hear more from the management in terms of what are the operating metrics that they're baking in with this sort of operating profile since they've maintained the guidance. But I think the very clear positive is the deal signings as well as strong growth in the core verticals, so BFSI and retail, CPG. I think these 2-3 things are clear standouts. So we have a buy rating on Infosys. We would want to wait to hear from the management before revising our estimates, but it's unlikely to be changed dramatically.
This is Nanta in New Delhi. We will be joined by Sanjeev Hota as well. I wonder if he's still with us. Sanjeev Hota of Sharekhan will be joining us. Apurva, I do know that you said you're waiting for more details from the management commentary. Stay tuned to ET Now. We'll be live with that earnings conference as well as with the press conference. But tell me from your first cut analysis, and how would you stack up these results as against TCS? The comparison has to happen. It happens every quarter. What is it looking like at the moment?
Sure. So, I mean, if you're looking in terms of an earnings growth trajectory, we expect TCS to outgrow Infosys as it stands today. So I think that's where a lot of premium in terms of valuations that you're seeing coming from. The margin differential continues between the two companies. At the same time, I think that's reflected in the valuation premium that TCS holds. So we currently maintain the premium valuations for TCS. So we currently value TCS about 24 times September 20 and Infosys at about 18 times. I don't see yet reasons for valuations to converge. We do believe that there's probably stronger execution happening at TCS's end. And having said that, within the Tier 1 IT pack, our pecking order would be TCS followed by Infosys. So having said that, we do like Infosys too. And if I have to call out two stocks from Tier 1 IT, it would be TCS and Infosys in that order.